Happy Wednesday, everybody. No, I try to say that not sarcastically. I'm trying to actually be a little bit more upbeat. I have not hit my head on a door today, knock on wood. So this is actually working. This is not actually wood, is it? I'm in trouble. All right. So today we're going to go through our next NetSuite activity, and you'll have to give me a second. I'm going to have to pull up some of my notes because I got to remember exactly what it is I want to do. So just as a quick piece of context. So we're going to be working through the next part of the NetSuite activity. As we're working through this, take notes, and you're able to work through this directly. Great. If you lag behind and need to do some other stuff, then you can just refer back to the video. I would strongly recommend that you have your notes very detailed, and that you actually refer back to them, as you will be doing an independent assignment next Wednesday. It is not a difficult assignment, but it is largely based on what we're going to do today. Today, we're going to be doing some very simple things, and you're basically going to be replicating that on your own next week. But if you don't follow the steps, then it will be a little bit more challenging because you won't know exactly where to go. So as always, as we're going through this, I am going to go through it slow. Even so, if I go through something too quickly and you need me to back up, make sure you interrupt me and let me know. You can always watch the video. This is one of those rare times in the videos that I'm recording that I'm not talking super fast. I tell my students, if you're watching a lecture video, slow it down to about 0.75 speed, and that's pretty understandable, okay? But for these can go and watch at normal speed. I always say that when you watch me at 0.75 speed, I sound understandable, but I also sound a little bit drunk. Yeah, so it's a bit weird. So let's go ahead and get logged in. And you can there, just go ahead and put in your password. All right, so you should be on the main screen and it should have your information up here. We don't have any recent records yet, but we will take care of that today. What we will be doing is we will be going through and doing some additional setup, and then we're going to be doing some transactions. This is going to be a unique set of transactions. We're just going to be doing journal entries manually input. And so this is not something that's commonplace in most ERP systems. This did not happen typically. However, it is possible to actually manually input transactions. And so we're going to go through that step first as kind of an intermediate step before we go through the actual process of doing revenue and purchasing transactions. So first thing we're going to do is we're going to have to set up some items. What we need to do to start out with is we need to make sure that our accounting periods are proper. So the very first place I'd like you to go, so we're going to do some setup items. So we're going to highlight setup, and as always, whenever we do the highlight here, just highlight and don't click until I tell you to. Then we're going to go to accounting. And then if you look down on this list, you're going to see manage accounting periods. Once you get down there, go ahead and click. All right. So you will notice that we've got a list of fiscal years. And interesting thing, this has been updated fairly recently. We used to be working off an instance that was originated in 2016. So I had been using that up until like last January, this January 2024. We've been operating on the 2016 instance, which basically means that we had a whole bunch of years up until 2016, and we were still working on it in 2022 and 2023. But we've got a pretty updated instance, which is nice. There's a problem though. You will look that if you can expand and collapse these years just by clicking on the plus and the minus sign. If we collapse all the years, we have fiscal year 2023. Now, this is not going to be an exam question, but I expect all of you know the answer to this. What year are we currently in? 2024, yes. Okay, so does everybody see the problem there? Okay. We're going to be doing current period journal entries, which they do actually have current period journal entries in here. We need to have a current period. So let's go ahead and set up a full year. I want you to click up on set up full year. And there's not too much to this. We want to verify the information is consistent. By the way, this will be a step that we will do constantly throughout the NetSuite analysis. We will just be clicking one or two buttons, but every time that we do an intermediate step, I want you to check and make sure the information is consistent, okay? So we got to make sure that we're on calendar fiscal year, that our fiscal year end is 2024, because we're trying to set up a current for the current year. And that's, again, all of that should be natively input. You shouldn't have to change anything. The goal here is not to make sure that you know how to click a mouse button. Again, assuming most everybody can do that. If we do need a refresher in that, I can set aside some course time. But the goal here is not that. The goal here is to make sure that when we do a routine, we do a procedure, we know exactly what we're looking for. In this particular context, we have to make sure that it is the current year and it's going to be a standard fiscal calendar. But noting that both of those are input correctly, we can just go ahead and save that. And once we do that, when you get that saved, you're going to notice a new year has been added on, which is good because now we can operate in the current year. So we have fiscal year 2023 and now fiscal year 2024. And it breaks down according to quarters and months as well. So everybody got fiscal year 2024? Again, this will be really important as we move forward because we're going to be making some journal entries in fiscal year 2024, which is the reason that we had to set this up. All right, so the next thing we need to do is we need to make some changes to what we call the chart of accounts. All right, chart of accounts. And by the way, this step is not something that will affect the transactions we will do today, but it will affect the transactions you will do next week. So first of all, let's talk about, has anybody heard that term before, chart of accounts? Okay, hopefully you've heard the term before and you remember it from 220 or 221. I don't know how much they talked about it, but basically a chart of accounts is just a listing of accounts that are in use by an organization. Now, when you learned about basic journal entries back in 220 and 221, you just referred to them by the account name, like cash, accounts receivable, cost of goods sold, sales revenue. In reality, many organizations will have many different account types for kind of these common accounts that are in use. Like an organization may not have just one accounts receivable account. They may have multiple accounts receivable accounts. So going by extended names can get really, really daunting and tedious. So a chart of accounts is basically going to be a numeric classification for all of these accounts. Let's go ahead and take a look at what it looks like, and then we're going to create a new account for our purposes. So here's what I want you to do. We're going to go setup again. We're going to go to accounting. And then we're going to go down to the manage GL. We're going to go to chart of accounts. And I just want you to click on chart of accounts. So these first few are kind of our placeholder accounts. We can ignore those. Let's go down to where it starts with cash in 1000. And these are kind of our traditional accounts, but as you will notice, we have got multiple cash accounts within this particular organization. So just putting everything within one account would be challenging, particularly if we need to differentiate what type of cash transactions there are, which we are going to actually do a cash transaction here in just a second. Additionally, you can scroll down and you can see that it looks like we've got a whole bunch of asset accounts that are listed in our 1000 series. If we go down to the 2000 series, you will notice this changes, that we go actually to liabilities. We've got payables set up. And we can continue on as we move through the chart of accounts. And this is a pretty typical chart of accounts for many organizations. We get down to the 3000 series, we go to equity. Then we get down to 4000 series, we've got revenue, and then 5000 series are then we've got some additional items that are kind of expense items that are included in 6000, 7000, 8000, 9000 series. So one thing about a well-organized chart of accounts is you should be able to delineate where certain types of accounts go. This one's pretty easy. So basically, if it's in the 1000 series, we're going to be using assets. Or in the 2000 series, we're going to be doing liabilities. 3000 is going to be equity. 4000 is going to be our revenues. And then everything after 4000 is basically expenses. I would like it a little bit easier, like a little bit better if everything was in 5000 and then just stop there, but I'll take what I can get. Having worked in data analysis way back in the day, I will tell you that most organizations in the real world, their chart of accounts are not so neat and well contained. So we're actually at a blessing that we get to use this particular chart of accounts. If you go out and do a data analysis in the real world, something you may find is that certain accounts may sneak over into other categories. Why is that the case? Well, there is a limited number of numbers that you can actually have in a 4-digit account series. So basically, by a 4-digit account series, we've got every number from basically starting at 1000 to all the way up to 9999, which is roughly 9000 different numbers. What if your company has 12,000 accounts? Well, that creates problems in and of itself because you have more accounts than you have numbers available for. But say, for example, that you've got 500 of asset accounts, but you've got 2000 liability accounts. You may start sticking liability accounts in the asset categories. that's what creates problems, is because it's difficult to differentiate between where the counts should be. So this is nice and clean for us, and that's the way we'd like it to be in the real world. I will say that 4-digit account series are very uncommon. It's usually a small organization. The companies I worked for had 6-digit account series. So basically 100,000 would be the asset account series. 200,000 would be the liability series. And that's a lot of accounts to handle. It's basically when you have as many accounts in an organization as many companies have transactions. That's pretty daunting. All right, so what we're going to do, we are going to create a brand new account, which I said, this account that we're going to create is going to be very important next week, though not useful this week. So let's click on new. Right at the top where it says chart of accounts, click on new. I did kind of jump through that. I apologize. I'm going to go back and make sure that I didn't work through that. Let's see, hold on, separate accounting, chart of accounts. If you got the new, great. If you didn't, okay. So chart of accounts, and you can see right down here, it says new right below that. So we're going to click on new. And here's what we're going to do is that next week, you're going to be doing some transactions for a purchase of a vehicle. Currently, we do not have an account in place for vehicles. So we're going to actually create an account. So what the number is, I want you to type in 1522, which makes sense because we said the 1000 series is going to be our asset accounts, and we've assumed a vehicle is going to be an asset to the organization. Though I've had some vehicles in my life that have been true liabilities. Okay. All right. What we're going to do is we're just going to say automobiles for our name. And you can kind of see I've done this before. So I want you to type in automobiles. And then this is really important because this is going to dictate how everything else fills in. I want you to go down here where it says sub-account of. I want you to type in 1520. We're going to make this a sub-account of property, plant, equipment, which is PPE, machinery, and equipment. Now, why is this so important? Because currently we did not have our classification for our account set up correctly. Because if you did not put in a sub-account here, you'll notice it says 1522 automobiles, and it likely says expense right here. By making it a sub-account of another account, it automatically changes to fixed asset. Now, if we did not want to make this a sub-account, say we wanted this to be an account that was all on by its own, independent, we could change the sub-account manually. But this is just an easy way to make sure we have it in the correct account. So we have it as an asset account because it's a fixed asset account. It's a sub-account of an existing account, which is great. Let's make one other change because this is going to be important for our transactions. By the way, from what I remember, if you don't make this change right here, you will not be able to find the account in subsequent transactions. So this one's really important, even though it seems very, very simple. Over here in subsidiaries, what I'd like for you to do is I'd like you to scroll down and select Parent Company, United States West. Now, again, that seems like such a small little detail, but as I was revising my procedures last spring, I was going through and making some updates. I failed to make this change, and I spent like half an hour trying to figure out why I couldn't find my automobiles account. So there are some important details to note that if we're going to be doing transactions for United States West Company, we need to be doing them in accounts that are authorized to that particular organization, okay? Which you think the parent company as a whole would be applicable, but in this particular instance, we have to have it specifically for that company, for that subsidiary. Once you've done that, again, just a reiteration, let's go ahead and check and make sure everything is correct. 1522 automobiles, it's a sub-account of 1520, which is the type of fixed asset, and parent company, United States West. Once you have those set up, go ahead and click on Save. All right. So we're saving our new account. What is the most logical step that you would do as a manual check for this next part before we move on to our next part? Look for it. Yeah, so let's find it. Okay, let's find our new account. There we go. 1522 is a sub-account right here. That's good. All right. That may be a tedious process, but again, we want to make sure our accounts are correct. So we want to make sure it's validated and we're in good shape. Okay. So let's do some transactions. What do you guys say? Do some transactions. We're going to do one transaction a day. I promise if you don't feel like you're getting as much out of this, you'll have more transactions next week. So you get to look forward to that. But today we're going to talk about the very basic iteration. Now, again, this is not our typical transaction series. Our typical transaction series will operate in cycles or in process areas when we start talking about how we actually enter a revenue entry or we enter a purchasing entry or procurement entry. So we're going to follow the cycles when we move forward in this, but these are going to be how we would create them if we wanted to have a standalone entry that does not follow any one of these cycle processes. This is not going to be our typical process, but it's basically an introduction to how we would consider this. The way that I like to think about this is that you've done journal entries before. This is how we're going to do a manual journal entry through a computerized system. Now, what's the difference? When we get to the cycles, we're not going to be creating journal entries directly. Like you're not going to be typing in, okay, debit, cash, credit, accounts receivable, or whatever the series would be. Yeah. You're actually, the computer will do that for you, but we are going to have to specify accounts. So we need to understand what the computer is seeing. And then once we've done that, we can understand what the process is and what areas we're going to be walking through in the system. So this is kind of our introductory step before we get to the more advanced stuff. All right, let's go ahead and go to transactions. Financial, which is down at the bottom, and then you're going to go over to financial and scroll all the way there, go all the way to the top and go to make journal entries. So you go ahead and click on that. I'm going to leave it right here. So if you try and find it, get there. So highlight transactions, go all the way down to financial, then all the way back to the top to make journal entries. And like I said, these are what we would call manual journal entries. These are not journal entries that are created automatically as part of a process. If you were an auditor, if you were going through the system, these would be journal entries that you would scrutinize very heavily because these would be journal entries that were manually input rather than going through a process area. So this is something that's pretty typical. A lot of organizations have many manual journal entries, but they tend to get scrutinized much more heavily because it's not the computer that's creating the journal entry, it's an individual creating the journal. Now, what do we know about individuals and organizations? Is it possible? I mean, just hypothetically, is it possible that somebody could actually create a journal entry for a transaction that didn't actually take place? Yes, okay. I did 1 million hours of work this week, so I'm going to create myself a $20 million paycheck, and that's going to be a transaction that I will pay out to myself. That sounds like good work if you can get it, actually, but yeah, usually we consider stuff like that fraud, okay? There's actually a funny story. We were doing manual journal entry testing for one of my jobs, or one of my job back when I was at KPMG, but for one of the clients we were working for, and we started seeing people who were working 200 hours a week. Now, if you've ever thought about this, there's 168 hours in a work week, okay? That's total hours, not the number of hours worked, okay? It is literally impossible to work 200 hours unless you've got one of those time turners from the Harry Potter movies, okay? Which to my knowledge, nobody does, all right? So that was kind of an interesting discussion to have with the chief audit executive, is to say, yeah, people are being paid for a lot more hours than they work. Well, how can you tell? Because there aren't that many hours in the week, okay? So back here in the journal, we're creating a manual journal entry. And it's going to be a very basic one. This one's not too suspicious. But let's go ahead and check the information. Today's date should be entry. You will notice it says entry number to be generated. In previous versions of NetSuite, it did not automatically create the journal entry. And this was a bad oversight in the old NetSuite system, because one of the things that we like to see in a system is we like to see sequential journal entries. Why do we want to see sequential journal entries? Because the journal entry that occurred on September 18th should occur after all the journal entries that occurred before that. So the ones on September 17th, September 16th, so on and so forth. And the ones that were created on later date should have a number that's later than that. Now, I want to go ahead and make a note here. We will see some disparity in that regard. We will see some journal entries that are dated in October that have much earlier sequential dates. But typically speaking, in a true system, if we were doing this in business, one of the things we'd be looking for is we'd be looking for a sequential series of numbers that match the sequence of dates. If there's an anomaly, like say, for example, we see a journal entry with a much earlier date that occurred later, we would say, what's going on here? This doesn't make sense. That would be where we'd look to investigate the system when there's a problem. So it's nice now that the system itself creates these automatically. Can we edit those? Yes, and it's a long and arduous process to do so, but we're not going to be doing that for ourselves. We're going to be taking the numbers that are given by the system. All right, what do we want to do? Well, let's go ahead and let's, first of all, change the subsidiary because it's a required piece of information. And remember, we're operating out of US West, so click that drop-down menu and click on US West. And in doing so, it's going to update some information. It's going to actually put the currency in there because that's a dollar, or the currency we're operating up here in the United States. Exchange rate stays the same because it's the same item, and the posting period is automatically updated as well. So you should have all that update from US West. Now, let's go ahead and create a very simple journal entry. Let's say that I've decided for my organization that I've invited some AIS students from Truman State University to come visit my operations and see what NetSuite's all about. And I want to buy them lunch, okay? Because they came all the way over here to Violet Hall to see my operations here. So that would be great if I could just actually start a side hustle here in Violet Hall, which maybe I'll start doing that. That's just a really good idea. Anyway, I'm going to pay for lunch, so I'm going to just put that in a miscellaneous expense account. So here's what we're going to do. Down here in accounts, sure, you should be on the lines here. It should be on the line sub account. I'm just going to create our identify an account. This is going to be my miscellaneous expense. So if you click, it probably is one of the lines that's listed here, 6,081. If it's not on your list, you can go ahead and type in 6081. It will automatically populate that as well. But I'm going to put this in operating expense. So that's where I'm going to charge my expense to. And I'm just going to say, I'm going to pay $200 for this lunch. So once you've got the account identified, you can hit the tab key. We're not going to put anything in department, class, or location. Can we populate those? Absolutely, if we want more detail and we want more information about the nature of the transaction. And to be honest, we probably should if this were a real transaction. But all we're going to do here is we're just going to go to the debit. Because remember, we debit expenses, okay? That sounds like a joke, but I actually taught a junior level class where students were trying to argue with me that they were crediting those expenses. I said, when do you ever credit expenses? I'm not saying it's impossible, but traditionally, no, we don't credit expenses. They did not get points for that activity, by the way. And so that did not help my evaluations either. All right, so this is a long time ago. All right, so we're going to type in $200 because while I'm buying you all lunch, I'm not going crazy. I'm going to go to Taco Bell where it's cheap. Okay. All right. But as we know, every good debit has to have a credit. Okay, so let's go ahead and let's add a line item. In this one, I want you to go ahead and put in 1040. Just going to be a petty cash transaction area. So have you all heard petty cash before? Have you heard that terminology? Seen that account? Petty cash is basically just a cash holding account for organizations where they can pay for small transactions. Many organizations don't use it as much anymore because of electronic transactions, but some small companies still do. So we're saying I'm a small company. I've got some petty cash set aside to pay for small incidental expenses like this. All right, so I'm giving up some cash, which means that I'm going to be crediting my cash for $200. So once we have that, now you can do this either way. If you want to get security, you can go ahead and add, and then we've got both those listed here. You don't necessarily have to click on add because we've already got the parts of our journal entry. All we're going to do is once we've created both those components, the operating expense and the petty cash, we're going to click save. Now we need to talk about an important distinction between the way computerized systems work and the way that your manual systems that you learned back in 220 and 221 work. So we're going to wait for this transaction to go onto the system, but we're going to talk about where it stands. So NetSuite is traditionally what we call a batch processing system. That means that basically there's a separation between the time that the transaction is created and its approval. And we're going to see that in the later steps when we start talking about purchasing and revenue. We're going to see how that works. But this is kind of an important feature of many computerized systems is that they're batch processing. They actually have a separation between their creation and the time that they're actually put into the system. Now I want to show you the characteristic of that. Let's go ahead. Let's go to transactions. So you notice that we've actually saved the transaction. So we go to transactions, financial. All right, I'm sorry. All right, so I'm looking at the wrong place. There we go. We're going to make it again, but we're going to go to list. And we're going to see a whole bunch of journal entries here. We're going to find our journal entry, which is likely the last one. Now, there's a few things that are going to be problematic, first of all. You're going to notice that we've got a journal entry up here that's much earlier in number than our journal entry 440, but the date is later, which this is, as an auditor to me, is problematic. If I was the auditor, I'd be kind of like storming in and said, what's going on in your system right here? But I'd be saying, well, okay, we're operating in an environment in the classroom where we're not making real journal entries. And then say, I don't know why you came in anyway. We didn't actually hire an auditor. But yeah, in the real world, we'd be really, really suspicious of something like this, having an October date with a much earlier journal entry. Here, we don't care too much. What I really wanted to point out is this thing called approved for posting. So what does this mean? It means that we've got a transaction that's been put into our system, and it's basically waiting for approval. It's basically waiting to be approved into the system, which is what we call a posting. So there's two separate steps. There's creation of a journal entry, and there's posting of a journal entry. And the posting basically makes it go into the system, puts it in there as a valid transaction. So it's not created as a valid transaction yet. This would occur at some point later in the future. We're not going to post this journal entry because this is just kind of a traditional creation setup. But I did want to make sure that we have that distinction. When we get to the revenue and purchasing steps, what we'll be noticing that there's the separation between those steps is going to actually take place when we start talking about approval of transactions. That's when the transaction will get posted based on when we have recognition. We already know this a little bit from our revenue module. Remember, we talked about when do we actually recognize the transaction, and that was when we deliver the goods or services to the customer. That's what's happening in the system. When the goods are delivered to this customer, the system says, all right, we're able to go ahead and create this transaction now. Do you approve? And we'll say, yes, the transaction approved. That's when it hits the system. So important distinction to make. By the way, you might want to note that our journal entry number is journal entry 440. Now, this may be different for those of you, again, this will change. Make sure you make a note of your journal entries because we're going to make references to those. Today, it's going to be very easy because I'm assuming everybody in this room, well, at least most everybody in this room will have the same journal entry number. As we work next week, you may actually make some mistakes and have to redo tasks, which means that you'll make additional journal entries. That's fine. Just make sure you document your journal entry numbers because those are going to be relevant for how you create reports. Okay. Speaking of which, we're going to make a report. We're actually going to go through how we actually create a transaction detail. Oh, one other thing I want to mention. Okay, since this has not been posted yet, we have the option of deleting this journal entry. I'm going to show you where. Before I do, let me make it clear. Please do not delete this journal entry. Okay, that's going to make it really hard to create a report transaction. You're going to do the same tasks as everybody else and come up with blank lines. Okay, we don't want blank lines, so don't delete the journal entry. I'm just going to show you where the deletion occurs. So you'll notice over here that we're highlighting this journal entry. I've got this little person with a gear over there. You'll notice that there's some options here. Down at the bottom, we have delete record. Since this has not been a posted journal entry yet, we do not have to accept it. We can just delete it. That's the big difference between a posted entry versus a created entry. Created entry can be deleted. It can be modified. We can edit it. You'll notice that there's still an edit option here. Once it's been posted, it is on the system. Think about it this way. Remember when you made journal entries back in 220 and 221? Once those journal entries have been booked, the only way to correct a journal entry was to do a reversing entry or a correction entry. This is how we think about this in the computerized environment. When it's created, it can be deleted, it can be edited, it can be modified. We don't have to worry about changing the journal entry, or we don't have to worry about reversing the journal entry through those means. Once it's posted to the system, that's where we say, all right, we need a new journal entry to make any corrections. So that's kind of the distinction that we're making here. Since we're only on creation step right here, we can delete it. We can also edit it. All right. Let's go ahead and create a transaction detail for review. So we've actually got this journal entry. Somebody is going to want to review this journal entry to make sure that it's posted. So what are they going to do? So we're going to go to reports, financial, and then transaction detail. Now, technically speaking, we could also go over to customize, but I want to go to transaction detail first to kind of show you what we're going to be looking at. So reports, financial, transaction detail, and click on transaction detail. All right. So this is the detail of all transactions that are currently pending in the system. Some of these have been created, some of these have been created but not posted. Some of them have been posted, but we can actually still refer back to them. Basically, what we want to do is that for our journal entry we just created, we want to create a report that shows this information. So we're going to create a custom transaction detail report. And you probably have guessed this, to create a custom transaction detail, we just go down to this button, right down here, it says customize. So go ahead and click on customize. Now you have four options here. This is a really important one. This is one where people get confused in creating this report. We're not going to be messing with the edit columns. Could we modify the columns? Could we change the information that's in a report? Absolutely. This is where we actually change the columns. We can also sort information or do other options. But for what I want for this particular report is I want you to go to filters. So you can kind of see that we've already got some filters preset in here, which are very helpful, okay? We want to actually have everything that's in the full parent company consolidated, which is going to capture all transactions for the entire company. And we want it for this month because we're currently in the month of September. But I want a specific report that relates to my transaction that I just created because I want approval for that. Excuse me. So here's what I'd like for you to do. I'd like you to go over here to where it says add fields and click on transaction, the little plus sign next to it. Come on, you can do this. Or you can be like me and you can click on transaction and it does absolutely nothing. There we go. All right. So first of all, what I'd like for you to do is I'd like you to scroll through the entire list. Transaction is just one of many options that we can actually sort on. You will notice here that we've also got accounts, entities, price level, all these kind of things. But we're going to stick with transaction, and we're actually going to select one of the filters that's already in the transaction list. Now, this is really important because if you get this wrong, it will set you back. You will have to repeat this step. So make sure you're paying close attention. You will notice that there's a help menu down here that talks a little bit about what each of these items are, which is really great because that actually helps us out a lot, no pun intended. We're going to identify a document number. There's a problem though, and if you scroll down to document number, you'll easily identify what the problem is. Okay, what is our problem here with document number? There are two of them, okay? There are two of them. How do we differentiate which one we want to use? Well, let's go ahead and let's look at both of these document numbers and make sure we understand what they are. So the first one says, this is a custom field created for your account. Contact your administrator for details. Does not sound like what we did. It sounded like we actually had an automatically assigned document number. Remember, the NetSuite created it for us. So if we use this first document number, we are going to get back 0 results. So what is probably our logical step? Let's look at the second document number. Is a transaction number that is automatically assigned or entered on each new transaction record. Does that sound like what we did? Yes, okay. So click on the second document number. Again, if you clicked on first document number and say, what's the difference? They're both document numbers. You're in for a sad surprise. Sad surprise. Which I guess is still a surprise, so that's a little bit nice thing. Okay. I'm sorry. Trying to keep it lively. This is NetSuite. Okay. So what we're going to be doing here is we want to pick up that transaction that we just did. So I want to talk about how we can do it for this transaction, but then I'm going to add a step, an intermediate step. And the reason I'm adding this step is because it's going to be helpful for you for next week. Okay. So obviously you'll notice that there's a lot of filter items here. We have equal to, not equal to, before, after, or and even some items down here. Since we only have one transaction here, we can just go ahead and type in JE440. We'll click on done. We'll click on done. There we go. Let's go ahead and preview this real quick. So if you hit preview, you should see your journal entry. Everybody pretty happy with that? If you have confusion, it's not a problem. But here's what I want to do is that I want to actually do something a little bit different. We're still going to have the same result, but this will actually help you with what you'll be doing next week. Because I already alluded to the fact next week you're going to be making multiple transactions. So if I say equal to JE440, the question naturally comes up, well, do I have to create a report for each individual transaction? That would be really, really onerous. That would be a big waste of time, don't you think? So what do we do if we want to actually capture multiple transactions? Let's return to customization. And let's go back to this filter here, to that third filter, that one that we created. So if we create on the value, it says equal to JE440 currently, right? What I'd like you to do is I'd like you to change this to between. And then just type in JE440 for both values. Now you say this is a lot more work. So yes, in this instance, it actually is a lot more work. But what about the instance where you have like 4 or 5 transactions that you're trying to capture? This makes things much, much easier for you. So click done. And let's go ahead and preview again. And we still have our same item. Which again, if you didn't really want to go through my extra work and learning about the filter, that's fine, okay? Because we got this. I will recommend that you rewatch this part of the video or take notes on it so that you are well aware of how to do that, because it will be helpful for you next week. Again, spoiler, I know, it's not good for Marvel movies, but it's really good for AIS assignments, okay? So we want to pick up these transactions, and this is our report right here. So you all have created a journal entry. And you want to submit that journal entry for review. Now, in reality, probably what you'd do is you'd forward this to somebody in the system through NetSuite. We're going to do something a little bit more archaic. You're going to quote unquote print out a report and you're going to submit that report to me. All right. That's your assignment for today. So let's go ahead and go down here to this little red icon. So what is this red icon? It says export PDF. This is a really nice tool. Unfortunately, our other reports that we're going to create later on in the semester are they're not as adaptive. They don't really work with us nearly as well. They tend to want to put them into other formats. Pretty much every deliverable that I'm going to ask you for is either going to be a screen capture, like the one that we did last week, or it's going to be a PDF file. All right. This is really important, by the way, because like I said last week, if you submit it in the default that NetSuite does for some of these, it's not readable, either by Brightspace or even just in general. There's no actual Word programs that will open up those files. And so if you do it one time, I will politely say, please redo the assignment and put it in a PDF. If you do it second time, I will write a 0 next to your grade, okay? So please just make sure you get this right for the first time. And you'll hear me harp on this. When we get to the deliverables for the last 4 assignments, I will say this every single time. Don't save this as a whatever file NetSuite says. I don't remember what it's called. It's some weird filter name. But I'll say, make sure you save this as a PDF. And I will show you how to do it. It's very easy to do. If you don't know already how to do it, it'll be a benefit for you in the future. But it has to be done this way every single time. So we're actually going to create the PDF file. So I'm going to click on that. This one's really easy. You have custom transaction detail and some number here. So we can go ahead and open that. It should look just like this. So there are 2 things that you will need to do. So let's do the first one because it's really easy. I want you to go back to NetSuite real quick. Let's go to return to customization. And once you're back on this customization on this filter right here, I'd like you to go ahead and just click this save button. Now it just kind of shows you the report there. It's been saved. Now this is save the report, but more importantly, it's actually saved the filter that you used for this. So if you want to use a similar filter, like maybe for next week, you can actually go into NetSuite and pull that filter up. More likely what you'll do is you'll just go through the manual process again, and that's fine. It doesn't save that much time. But imagine that you're operating in the real world and you're creating these reports on a daily basis. And so you wanted to actually create a report and send that to your supervisor every single day. You probably don't want to go through this archaic method of clicking and clicking and clicking and going through the document and identifying, oh, it's not the first document ever, it's second document ever, doing that every single time. You just want to have a template already set up that you can adjust whatever you need. That's what we just did. We saved the filter, okay? And so you can utilize that filter moving forward. So that's the first thing you need to do, save the filter. Second thing you need to do, this file right here that you just created, it probably got saved to your document or your downloads folder on your computer. That is your submission for today's assignment. You do not need to rename the file because as long as you submit it under your name on Brightspace, I will know whose it is, but that's your upload. So take that file, upload it for today's assignment, and you're done for the day. All right. If you have any questions, I'm going to go ahead and stick around, but once you're done, we're done with class. Thank you very much.